What if a developer could ignore property taxes for years, let some simply expire from collection, then donate the land to a nonprofit land conservancy, and still claim a generous IRS tax deduction? And walk away while the county, and ultimately you, the compliant taxpayer, picks up the tab? And what if that same conservancy never pays a dime in property taxes on the land it receives, places a conservation easement shortly after taking title, and even after the properties are sold at tax deed auction, still retains a beneficial interest at everyone else's expense? Today, we're examining one documented example in Putnam County, Florida, involving Interlochen Lake Estates, LLC, and the Putnam Land Conservancy. This is one video of several in our ongoing series on tax deed practices, conservation easements, and how the burden shifts in rural Florida. Let's meet the key players. First, the developer Interlochen Lake Estates, LLC, which developed subdivisions in the Interlochen Lakes Estates area of Putnam County. Second, the recipient nonprofit, Putnam Land Conservancy, Inc., a private nonprofit that has received multiple properties from developers in the region and maintains a master declaration for conservation easements on lands it owns in fee simple. Third, the entities that step in when taxes go unpaid, lien investors and tax deed applicants, such as AX2D Ventures LLC and ADK Fund 1 LLC. These parties pay the accumulated back taxes to protect their certificates and often end up as the new owners after tax deed sales. And finally, the ones who always seem to pay in the end, compliant property owners across Putnam County. Their taxes fund schools, roads, fire and rescue, law enforcement, and other essential services, and they ultimately absorb the shortfall when others don't pay or when debts expire from collection. Let's examine one specific parcel in detail, parcel shown in the Interlochen Lake Estates subdivision. For tax year 2013, with Interlochen Lake Estates LLC as the owner of record, $258.98 was due when the bill expired from collection. The county tax collector became the bag holder for that debt. In 2014, another $207.69 expired from collection. In 2015, $196.63 met the same fate. That brings the total to more than $663 in unpaid taxes on just this single parcel across 3 years. Money that was supposed to support vital community services like roads, schools, fire and rescue, and other local needs. Instead, those bills were written off, leaving Putnam County holding the bag and shifting the burden onto compliant taxpayers countywide through the general budget. By tax year 2016, a lien investor stepped in and paid $164.33 to keep the certificate alive. Remember the key Florida rule. Property taxes are assessed based on the land's use as of January 1st of the tax bill year. These were real obligations for services already rendered or planned. The developer could have paid these bills or sold the lots free and clear on the open market and satisfied the taxes from the proceeds. Instead, portions were allowed to expire, and the path turned toward conveyance to the conservancy. The conveyance and easement, positioning for deductions. On November 17, 2016, Interlochen Lakes Estates LLC conveyed multiple properties, at least 3 parcels, to Putnam Land Conservancy, Inc. via fee simple deed. The legal descriptions were clean and unencumbered, with no conservation easement referenced. The developer could have sold these properties on the open market and paid the outstanding taxes. Instead, they chose conveyance to the nonprofit. Less than 11 months later, on October 25, 2017, Putnam Land Conservancy recorded a Second Amendment and Third Supplement to their Master Declaration for Conservation Easements. Prepared by local attorney Timothy Keyser, this document added lands, including the parcels we're examining, to the conservation easement framework governing properties owned in fee simple by the Conservancy. The timing here is critical. The developer conveyed these properties while they were still completely unencumbered by any conservation easement. This allowed them to potentially position for substantial IRS charitable contribution deductions based on the full value of the donation, including associated conservation attributes. Once the nonprofit held clear fee simple title, Putnam Land Conservancy could then encumber the properties under its master declaration. Once Putnam Land Conservancy took title, a consistent pattern emerges across the records. They never paid a single property tax bill on these parcels. For tax year 2017 on this parcel, PLC was the owner of record as of January 1 and received a full exemption on ad valorem taxes. The easement amendment had been recorded just days before the bills were issued. Remarkably, the legal description still made no reference to any conservation easement. A lien investor, 80K Fund 1 LLC, paid the taxes and later brought the property to lien sale. All subsequent outstanding taxes from 2016 onward were also paid by lien investors, not by PLC. A similar pattern appears on another parcel conveyed in the same deed. For tax year 2017, PLC was again the owner of record as of January 1 and received a full exemption on ad valorem taxes. The easement had been recorded just days earlier, yet the legal description still made no reference to it. A lien investor, 80K Fund 1 LLC, paid the taxes for 2016 onward. Across 16 years of tax records examined for these properties, Putnam Land Conservancy paid $0 in property taxes. The developer paid nothing on the portions that expired. Lien investors and eventual tax deed purchasers covered everything, more than $2,500 in back taxes, interest, and fees on just one parcel. Yet, in later tax bills, for example, the 2020 bill, the Putnam County tax collector added language referencing the 2017 conservation easement to the legal description. This encumbrance was not part of what was sold at the August 8, 2018 tax deed auction. The tax deed itself, recorded August 23, 2018, was based on the original tax lien legal description, which contained no reference to any conservation easement. Under long-standing Florida law, tax liens and the deeds that flow from them are generally superior to subsequently recorded private encumbrances. This raises a pointed question visible in the public record. Why would the office responsible for collecting revenue for the county and its citizens add a notation that benefits a previous owner who never paid taxes, potentially affecting the clear title expectations of the buyer who did pay the back taxes? The lasting burden, debt bondage, and unjust enrichment. Even after fee simple ownership passed through the tax deed process, Putnam Land Conservancy retains what the records characterize as a beneficial interest in these properties through the conservation easement. Meanwhile, the current owners, whether the original tax deed purchaser or subsequent buyers, have shouldered the very taxes the developer and Putnam Land Conservancy were responsible for paying. They continue to pay ongoing taxes, and their reasonable expectation of clear title is now complicated by an easement notation the tax collector added after the sale. In practical effect, they have paid to clean up the prior owner's debts, while the nonprofit retains ongoing enforcement rights under the conservation easement. This dynamic raises a deeper issue visible in the records. The county's own tax claims, which held superior priority because they arose before the conservation easement, appear in practice to have been treated as subordinate to the interests of these private, non-governmental entities. More than $660 on just one small parcel across 3 years alone, forcing the shortfall to be absorbed elsewhere in the budget, ultimately by compliant taxpayers or through reduced services. This isn't an isolated accounting curiosity. When such patterns recur, they quietly shift the costs of development and conservation onto those who follow the rules and pay on time. Current owner's reality: paid historical back taxes via purchase, plus current taxes, plus potential ongoing easement restrictions. PLC reality: $0 in property taxes ever paid on these parcels. Developer reality: shed liabilities, plus positioned for potential IRS benefits. This case sits within a broader pattern we've documented in Putnam County. Properties transitioning from developers to land conservancies, tax obligations accumulating or expiring from collection, easements recorded, and then tax deed sales, where public revenue collection sometimes appears secondary to other considerations. It surfaces legitimate questions for further examination. How are conservation-related charitable deductions valued for IRS purposes when the underlying real property already carries substantial unpaid tax liens at the time of transfer? What safeguards exist to prevent land trusts from inadvertently or otherwise facilitating the shifting of tax burdens from private developers onto compliant taxpayers and local governments? And why does the tax collector's office, in some instances, appear to note or preserve previous owners' encumbrances on properties sold through tax deed processes that are supposed to convey relatively clean title, especially when the county's own tax liens held superior priority, predating those encumbrances? These are not theoretical concerns. They are documented in the public record. Anyone can review the same deeds, bills, and summaries through the Putnam County Clerk and Tax Collector portals. In summary, a developer with accumulating unpaid taxes conveys land to a nonprofit conservancy. The conservancy encumbers the land and pays nothing in taxes. Lien investors and tax deed buyers clean up the accumulated obligations. The county and compliant taxpayers absorb the losses on expired debts and shifted burdens. And the conservancy retains perpetual beneficial rights, even after ownership has passed, all while both the developer and conservancy avoid their property tax liabilities. This is one documented way some developers access IRS tax benefits while the costs land elsewhere. This is how local government services can be quietly defunded. If this information matters to you, please like, subscribe, and turn on notifications for the rest of the series. And as always, verify everything yourself through the primary public records. Stay vigilant. Protect your community and your wallet. Until next time. This video is based solely on publicly available records from the Putnam County Clerk of the Circuit Court and Tax Collector. It is for educational and informational purposes only. It does not constitute legal, financial, or tax advice. Interpretations and opinions are those of the narrator or producer. Always consult qualified professionals and primary sources. No private data was used.